Welcome back to episode 2. This is Prime Forex. If you're new to this channel, please hit the subscribe button because you're going to be missing on opportunities that I share here. I share strategies, I share indicators that will help you succeed in your trading. So this is episode 2 for the previous strategy that I've shared a few days ago. There's a simple strategy. You will see that now I'm sharing the strategy on frame. This for people who want to hold longer, the people who don't want to scalp the market. This is for those who want to hold longer. And the nice thing about it is you'll trade both direction of the market. You'll trade both market direction. That is, you'll be buying, and again, you can be selling. Same strategy. So let's get to it. This is a very simple strategy. A very simple strategy in such a way that you only need to be using one indicator window. You only need to be using one indicator window. In this instance, it's indicator window 1. And you are using a very simple and underestimated indicator. This indicator is the moving average. This green line is the moving average. In this episode number 2, just ignore the moving averages on the main chart. So this green and black moving average, just ignore them. We won't be using them in this episode. If you want to know how to use them, kindly go watch the previous video. Kindly just go watch the previous video. So let's get to it. Most questions I get is I'll start with the zoom. So when you want to use this strategy perfectly, just zoom out completely to the smallest zoom in your phone. That's the zoom level we'll be using on this strategy. And guys, this is the most accurate zoom level to use, especially using indicators. You won't get fake signals a lot. You won't get fake entries. So this strategy is 95% accurate. But if you have a higher balance to hold the drawbacks, you can actually make 100% wins. Let's get to it. So how does this work? Let's look at the indicator window 1. You'll see here we have our moving average. It went on to our buy zone. So which trades do we take? We're only going to be taking trades that are, you see, the moving average went below 10 and then it's coming up. So we want to take a trade when this moving average is coming below 10 and it's coming up. So once it crosses below, that's a wait for an entry signal. And then when it comes back up to 10, you can take it. When it comes back up to 10, you can take it. That is here. You can take it when it comes back up to 10. Let it go below 10 and wait for it to come back up. The minute it comes back up, that's when we enter. And then here, this is where we could have taken our entry. Right here. See? We could have taken our entry right here. Our entry right there. But then you would notice that I took a few trades here. I was late in the market, but then because I know that my TP should be, sorry about that, let me put this one, the arrow. I know that my TP should be at 50. That's where my TP should be. So I just took in these trades. Just to ride it until it gets to 50. Up until then, I can hold the market. So this is for conservative traders, guys. If you're aggressive with the market, you just wait for it to cross up 10, that's when you take it. If you are not aggressive with the market, you could wait for this point here where it crosses up 15. Then that's when you can enter the market, when it goes above 15 again. After it dips down to 10 and then it crosses up again, 10, aggressive traders will take when it crosses 10, and then less aggressive traders will wait for it to cross above 15. That's when they take the trade. So you can see right here, I'm waiting for it to get to 50 level, and I can take my partial profit here, or take my profit and get out of the market. Or if you still want to take 10 candles, just take your 10 candles and get out of the market until you grow your account. Or I can just wait for it to go back again to my sell zone. I'll just hold until it gets to my sell zone, and then that's when I'll exit the market. So let's go back again and do a test run. So let's see here. We have it here crossing below 85 now. When it crosses below 85, we can see that our moving average, it came up, it went up, it crossed above 90, and then bam. The minute the moving average comes down below 90 again, aggressive traders can take that trade right here. Can take your trade somewhere here. Then you take your trade. Your moving average should cross below 85, then that's when you can take it, and then you're gonna take your market somewhere here. You can take your market somewhere here, and then you'll ride your market. You will ride your market. How long you have rode this market to this point? You can ride your market to this point, to where I was indicating my current entry, or you can just ride it from here to this point. Then you get out. When it reaches 50, then you get out. When it reaches 50, then you get out. So let's see here. Here's another entry. Mind you, this is 5 minutes, guys. This is 5 minutes. So here's another entry. What do? You wait for it. You ride it to 50, or you ride it until your sell zone. Simple as that, guys. Simple as that. This strategy can grow your account drastically. So let's go back again. Let's go back and check another one. Here it is again. We see another entry right here. You ride your market from around here to this point. Then you get out. So if you're gonna be using this strategy, guys, please make sure you do your money management, make sure you do your risk management, and follow it to the latter. And your psychology will play a bigger role in this. Imagine you've entered somewhere here. You've entered somewhere here, it goes down, and then again you see it coming back up close to your entry. What does your mind tell you when this happens? It's about to turn, the market is... The minute you get off the market, it goes down again. So get your psychology straight, guys, and follow your trading plan and follow your setups. What I will not advise you to do is to trade without a stop loss. Trading without a stop loss is very dangerous, because the market doesn't care about your account. It doesn't care about you. Anything could happen. The market does what the market wants to do. So make sure you trade with a stop loss and get out when necessary. Don't stay there and say, no, the market will come back. No, the market does what it wants. Market does what it wants. So make sure you protect your trades with a stop loss. So right here, I'm waiting for my entry. So I'm likely to hold yeah. I see the market do stuff right there. So I'm now holding till that point. So likely TP, or I'll just put in my stop loss in profit, then I'll be safe. So this strategy doesn't just work boom and crash. You can trade all the 10 index. Let's see how the trades are on volatility 10 index. See, there's the entry. You get this entry right here, you ride it. It's about to hit our buy level right here. You just wait for it to come back there and hit that level, and then you get out, or you simply get out when it hits 50. Simply get out when it hits 50. So that's a lot of pips. That's a lot of pips. So your entry will be somewhere here. Okay, exit that. Your entry will be somewhere here. See? 56 pips. That's a lot of pips, guys. That's a lot of pips. Or if you're gonna wait for, yeah, that's 56 pips. So let's back test it and see again. We have it again here. We have it again here. Who just made on that trade? So